I'm joined by Theron. She is the Head of Research at PPS Investments. And today we're talking about the PPS Moderate Fund of Funds. Henriette, welcome.
Thanks to you.
The PPS Moderate Fund of Funds, what is it?
Well, it's an actively managed fund and can invest in a combination of South African and international asset classes with a maximum allocation of 60% to equities.
So 60% to equities, South African and international. Let's talk about the methodology and process in the fund.
So the main driver of performance in this fund is your asset allocation decision or your exposure to different asset classes, as well as the successful identification and blending of manager strategies. Now, given the inflation target benchmark of the fund is specifically designed to participate on the upside, given a reasonable allocation to equities, but the other asset classes in the portfolio will provide the necessary protection should the equity markets not perform well.
So how does one go about structuring this fund?
So the portfolio construction process is very much driven by the benchmark of the fund. For this fund, given that the PPS Moderate Fund's got an inflation target, we believe that combining specialist managers where we as PPS drive the asset allocation decisions with multi-asset managers where the underlying managers independently make asset allocation decisions, deliver or result in a more robust solution. Now, in our house view process, and that's a process we follow to determine our asset allocation for the fund, we consider all main asset classes and we look at it on three different axes. The first is valuation. We look at assess whether the asset class is cheap or expensive in absolute and relative terms. And then we also look at the macro cycle. So, do we expect it to be a headwind or tailwind for the asset class? And then finally, we look at the prevailing trend or momentum conditions. Then, obviously, as a multi-manager solution, the quality of the success of the solution is very much dependent on the quality of the underlying building blocks, and that is finally the identification and combination of manager strategies.
So there's two legs to this. The one is the asset allocation on your side, where you pick the best manager within that allocation, and then there is managers that you blend this with. Why would you do that?
So the one half of the portfolio will consist of a combination of the specialist managers where each of the underlying managers have a mandate to outperform their respective asset class indices. So the combination of these managers will then ultimately be constructed in such a way to represent our asset allocation views. In the second half, it's, as you said, the combination of the multi-asset managers, and the aim is to combine the managers in such a way that we can still deliver a strong peer relative return and reduce volatility as well. So the reason why we have two different components is again just another layer of diversification. So if we are wrong in our asset allocation decisions, then we do have another part of the portfolio that will mitigate that risk.
And that will assist in trying to get the optimal mix in this respect.
Yes, so that's exactly what it's trying to do. So with each individual asset class as well, in the half where we allocate to specialist managers, we combine managers to get the mix right within that asset class as well. And that's driven by our manager research process where we look at the different investment strategies and combine managers with the different drivers and with complementary investment styles.
Now, Henriette, where would this portfolio, the PPS Moderate Fund of Funds, where would that fit into a client's portfolio?
So given that the fund will have a reasonable allocation to equity, the fund is suitable for investors with a medium risk tolerance, with a minimum investment horizon of 5 years, and it can also be used as a standalone retirement solution.
So it complies with the statutory regulations within the Pension Fund Act?
Yes, that's correct.
What is the target return of the fund?
So the fund aims to deliver CPI plus 4 over a rolling 5-year period.
And that's why it's for an investor with a longer term view and to achieve returns in excess of inflation. Henriette, thank you very much.